With big questions about Omicron and exactly where it goes from here, how severe it's going to be, and just whether or not we're going to see any major lockdowns coming through. There's been some knee-jerk reactions from some countries around the world about closing borders, but is it all just political speak? And should we now be looking for more evidence to see how things are going to move, especially in the mining sector where China is concerned? We've now seen China coming out with further measures to ease liquidity within the country. John Meyer joins us now from SP Angel, who's been monitoring the situation. John, in your morning note today on this Monday, you comment about what's happening in China at the moment. The reserve requirement has been dropped by, I think, 50 bips. As I said, we've got evidence as well of Chinese economy slowing down. What's all this mean for you and metals prices and opportunities in the mining sector?
It's great to see China using the levers on their economy to support the potential for further slowdown and further trouble. Remember, they've got the ongoing Evergrande crisis, and that now seems to be an officially managed reconstruction or deconstruction of Evergrande, from what we're hearing from out of China. You've also got other issues. I mean, Omicron, we are quite hopeful, and we've been discussing this closely with our healthcare analysts, that Omicron is a less deadly form of the virus, but it spreads much faster. And this is what seems to happen in the evolution of viruses. If we talk more widely about this, the common cold is a form of coronavirus, and eventually the COVID virus that has been going around will mutate into something like the common cold eventually. So the question is, at what point does Omicron either escape the Chinese authorities, because it's a bit more clever at escaping detection, and at what point does China decide that it will allow the virus to run around China and for the population to become naturally immunized? So there's a whole bunch of things going on here. Yes, there is a slowdown certainly going on in China economically, but there are also lots of good things happening. Today, China announced that they had reached over 300 gigawatts of wind power. And we're in a world that's about 750, 800 gigawatts of wind power construction already. And by 2030, the world will be looking to treble that number. So when it comes to metals, the metals that are important in wind farms and electric vehicles and stuff like that are still very important, and prices are still very high.
We hear a lot about this, and I know we've spoken before about it. So why in that case are prices not higher than where they are at the moment? We've been talking about the potential for a successful breach of the 10,000 level on copper. It did move above that briefly, but it's since pulled back. There doesn't seem to be much evidence that markets are pricing in future expectations. If was what we believe to be the case, and you've underscored this morning about this deal with China wanting to push ahead with the extra wind turbines, clearly there was going to be a demand for copper, but the markets don't yet seem to be appreciating this.
Well, we had two issues in China in relation to this. First, the government decided that high metals prices were dangerous from an inflation perspective, and they were very worried about small and medium-sized enterprises, which are big employers within China, and that their margins may be hit to a level which would make those companies unsustainable, and where the debt levels were going to rise too high. So we saw the government acting to sell copper and various other metals from the State Reserve Bureau stockpile. We also saw at the same time the Evergrande crisis causing an almost complete halt in construction across China. Certainly the Evergrande projects all stopped wholesale, but other projects also stopped. And the Chinese government has since been re-stimulating the market to get construction companies back working again.
One of the things we were talking about to Rainbow Rare Earths recently, talking to George Bennett, the chief executive there, talking about the companies like Rainbow Rare Earths, which has these metals that are going into these permanent magnets. And these little companies that are benefiting from some of these big contracts that are likely to come up at some point in the future. How confident do you feel about the outlook for small cap companies based in this particular space? Because this certainly seems to be the hot area that people are talking about.
Absolutely. There are very few companies that are able to produce rare earths in the Western world. And China doesn't appear to be able to produce enough for global consumption going forwards. And although so much of this processing and production is still focused in China, the world needs to ramp up more of these other producers. So companies like Rainbow, Macango, Rare Earths, Pensana, they're three of them are listed in the UK, are in pole position to bring on mining projects and take advantage of the higher price levels that we're now seeing for rare earth concentrates and indeed for rare earth metal oxides. And that bit is critical because if you sell a rare earth concentrate, you only get about 30% of the contained metal value. If you sell a rare earth oxide, not only will you get full value for that, but you might even end up with a premium for being a Western world producer. So companies like Rainbow and Macango are looking at different processes for the production of the direct production of rare earth oxides, and that's very important.
You mentioned as well in the commentary about copper, you're talking about inflation. Chinese authorities very cautious about this and trying to take action to prevent price inflation within the sector. But in fact, we have to acknowledge the fact that prices are going up around the world for many of our staples as much as anything. But consumer prices are rising. We've got the US consumer prices at the back end of this week. We're widely expecting the Fed to start a serious form of tapering ahead of its interest rate rise strategy that it's now beginning to implement. We've got Bank of England expected to move at some point. In terms of higher interest rates, how does this affect the mining sector?
Well, it's an interesting push-pull dynamic. So a company, people like the Fed Reserve Chairman, he's keen to raise interest rates, but he doesn't want to damage the growth that they have fought so hard for in the US economy. Same with the UK. They want to raise interest rates, but they don't do it just yet. And although we have high inflation, and in many respects that's quite useful for policymakers because of the debt that governments are all carrying, but what they want to ensure is that inflation rates pull back quite quickly. Now the question is, do they do that by raising interest rates, or will the natural deflation that's been in the global economy because of cheap Chinese goods come through and help to reduce the fear of that inflation going forwards? I think it's going to, as always, it's going to be a bit of a balance. So I don't think we're going to see inflation rising particularly quickly. I don't see interest rates rising particularly quickly. We'll get a short bout of inflation. A lot of that was driven by high oil prices, high natural gas prices, all of which are coming down now. So yes, I think we're getting a short, sharp shock, as was seen in the 1970s. And then I think everything will start to return to normal. And the question is, how long does that take? So I think 2020 is going to be a very, very interesting year when it comes to this. But yes, interest rates will rise a bit.
In the context of all this, just one final question has to be about gold. We're getting a lot of clients at IG talking about where is gold going to go. Many surprised that we haven't seen any further uplift from where we are. If we show a chart on what's happening, yes, we've got a short-term rising support line at the moment. Gold seems to be quite happy around this sort of 1800 level. Doesn't seem to be punching through some of the recent highs that we've had. But the market's still nonetheless being well supported. In the context of what you just said in terms of inflation, the outlook for interest rates and so forth, normally a hedge against inflation is gold, but it doesn't seem to be benefiting from that sort of enjoyment at the moment.
I think this is quite an interesting environment for gold, actually a very positive environment, because policymakers are going to continue to defer rising interest rates. And yet we do have inflation, and the inflation, I think, will be tolerated for longer than many people expect. So gold has been trading in around $100 trading range. And I think we're towards the bottom of that at the moment. And there was a lot of selling of gold ETFs earlier in the year by BlackRock, it's one of the global major funds. That we think that selling has all been done. And therefore, the market will always suffer a little bit of indigestion when it comes to following a sale like that. But I think the market has absorbed that sale, and I think the market will now start to look more positively towards gold, with prices starting to lift up.
Yeah. Okay, look, John, we'll leave it there, but thanks for joining us. Quick look at what's happening on the mining sector at the moment with regard, certainly, the easing of policy in China, the continuation of the unknowns about the latest variant of COVID-19 and how all this makes itself felt, bearing in mind interest rate rises look like they're coming in 2022. That's John Meyer from SP Angel. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.